Welcome to Rentals with Rachel. Today I have a special guest here with me, Donny Nguyen of Vander Wynn Property Management. He is the founder and partner of this property management company here in the Grand Rapids, Michigan area. Let's start off by getting to know him a little bit. Donny, tell me a little bit about your background and what led you to property management.
Well, thanks for having me. I've had a very interesting background, but I am a former W-2 worker, and I started off in real estate investing because I wanted to do passive investing. So I got into it by buying a couple of rentals. And then what happened was I didn't really like the experience that my tenants were having. They actually called me and had some complaints about the way that their properties were being managed and the way that they were interacting with their property management company. So they reached out to me. We had a long conversation about what they were looking for in their experiences and realizing that they were an important part of my portfolio because they were my revenue source. I had to make sure that they were taken care of. So I ended up managing my own properties. And then after managing my own for a while, I had some questions about folks wanting me to manage their properties. So that led to me getting my real estate license and then starting this company.
Great. Okay. So what would you say are the biggest operational mistakes that you see investors make that will hurt the return?
I think the biggest one is thinking about your tenants as tenants. So with Vander Wynn Property Management, we see our tenants as residents, and they're coming there to have an experience, basically housing, and they're there to stay. And then in exchange, they will pay us rent. So basically, the biggest operational mistake you can have is disrupting that rent stream. So taking care of the tenants, making sure that they're having a great experience, and understanding that even though it may be only a 1-year lease, there's an opportunity for them to release. And if they want to leave early, that's a disruption. If there's a big gap in between tenants, that's also a big disruption. So rent flow is the biggest gap that I see.
Okay. Great. So how do you analyze whether a rental property is going to cash flow before you take it on?
Well, the easiest way is just to look at the cost. So when we work with our owner investors, we look at in property like an investment property. So cash flow is a big piece of it. But the question is what are your calculations? So they're not really overly complicated. We look at the rents that we should be receiving and subtract out all of the actual hard costs that are there. And then we do pay attention to the turnover costs and the vacancies. And we also manage a lot of the rent fluctuations. So we have a high, medium, low. So when we look at the property, we look at location, we look at what amenities are there. But going back to the resident, we try to figure out what resident is going to really take to this place. And we have an avatar of who we think is going to rent it. And then we really just focus the actual unit on that type of renter. We're open to all. But we just have to have an idea of, if this person comes through, this is what this person would really like in here. Mm-hmm. So we really kind of zone in on a couple different resident styles and resident personalities that we try to cater to with each unit. And those are individualized.
Do you also do that in terms of maybe advising the owner how to decorate or how to paint or furnish the apartment of any kind?
We do to a degree. So most of our clients right now don't have furnished apartments or furnished units. So what we do focus on are the flow of the resident coming in. So if you do this for a while, you speak to a lot of different folks that are coming through that want to rent units, and you'll see that their eyes move a certain way, that their questions become very standardized. And so what we do is we make sure that we try to envision ourselves in the resident's shoes as they're walking through, and we'll make recommendations. And the recommendations usually aren't paint. It's usually usable area. And the question is how is this area being used? How can we make sure that this is where people are going to have a sofa? So let's make this a very comfortable area. Is there too much light in? Do we have to have blinds? It becomes pretty standard for us to ask these questions, but we didn't realize that it's not standard.
Right.
Or most people looking at their spaces, they just see a box.
Mm-hmm.
So what we try to do is make sure that the resident has a great experience, going back to having the avatar or resident coming through and just imagining what they're looking for. And each unit is different. It depends on where the location is and just a couple other scenarios, but we try to customize that recommendation.
Great. Okay. So going along that line, what do you see as the upgrades or renovations that an owner could do that would increase that ROI to attract maybe better paying clients or longer, occupancy rates?
Yeah, let's work with an assumption that's going to be a 1-year lease because there are a couple of things that we have to control for. So let's just assume it's going to be a standard 12-month lease. There are really 4 things that residents really look for. that are pretty common. You can have a long list, but it really comes down to air conditioning, a dishwasher, washer and dryer, parking. Those are the main four. And so when we're looking at those, the question is what do you have? And then what are the trade-offs that the resident is going to have to do? So if I can have all four, that would be great. Oftentimes, though, investing in all four is not going to be a great ROI.
Sure.
But I think a great first thing is to ask yourself, what don't we have and what do we add in? So the simplest ROI would probably be a dishwasher. It's simple, but if I have to not do dishes, then I don't have more countertop space. If I have more countertop space, my kitchen looks larger.
True.
So those are the kind of things we walk through. And if it's not practical, then the next question is well, do you have a microwave above the range? And a lot of folks don't think about that. But again, it goes back to countertop space. And it's dual functional. You can use it as a range hood. And now you have a cooking appliance that you can actually put in your list of things you offer.
Have you found that by making those simple things, simple changes, that an owner is actually able to up the rent a certain percentage based off of that?
It can, but it depends. I can't walk through all the scenarios, but there are two things you want to look for. There are rent drivers, like a dishwasher can, for example. Generally speaking, we can add $25 a month for rent. Okay. But it also boils down to rentability, because for some, we can increase storage areas, we can increase garage parking, and that can incrementally increase rent. But for some tenants and residents, it's either you have it or you don't. So it's actually rentability. So when we look at the trade-offs, the question is have we traded off too much where it's no longer rentable to a certain type of tenant? Now you're narrowing your tenant base. Sure. Or have you put in too much? And now it's open to so many people, but the ROI basically has tapered off because we've overinvested in the property.
Yeah, well, that makes sense. Yeah. Okay. And what would you say are some overlooked expenses that might kill an owner's cash flow?
I would say the most overlooked expense it would be a turnover costs. So when we're looking at vacancies, we often talk a lot about vacancy costs, which is just the time that the unit remains empty and is calculated by dollars per day, and it's not being rented. But that turnover cost is really there because when a tenant moves out, there are going to be some minor repairs, things that we have to do to get that unit back up to the standards that we want so that the next tenants can move in. And oftentimes that has been undervalued. So we try to give a budget depending on the unit, but we'll walk through and with our owner investors, we'll do a walkthrough pre-turnover and try to get those costs to the owner. And typically they're pretty surprised. Yeah. And, you don't anticipate it, but just, $500, $600, it doesn't go a very long way anymore for repairs. So I would say budget in the turnover costs and then also budget in the vacancy costs as well, just as a standard.
I think that's a hard thing for a lot of owners to accept, that tenants are hard on the property.
Yeah.
And some of them are not terribly hard on it, but just living in a place, you have wear and tear, and you have to replenish and revamp things just to be able to get a new tenant in there. And so I think that's important.
It is. Yeah. And that's what we don't realize is when you're looking at just like a kitchen cabinet, for example, you open that door. As a resident in your own home, you're probably opening that door for maybe one meal a day. But now you're thinking about opening up that door for 4 to 5 meals a day because you have roommates, or you have a situation where folks are working from home. So there's even more opening of that door. And so that hinge that you're worried about in your residential home could turn into a whole cabinet replacement from a renter perspective.
True.
So they're just things to think about. And oftentimes we can walk through, and I personally don't like using percentages to give people numbers. I try to walk through, this is what may break. This may be replaceable, and try to assign hard dollars to it so folks can budget.
That's good. Yeah. Tell us an example of when you've turned around a struggling property and you made it perform better.
Yeah, our most recent one was an owner investor that came to us because they were not happy with their current management. And so we went through some of the opportunities they had with their property. And really what it was is market rents. So they're actually under renting, and the rents were too low for the market. And so we walked through the unit, and it was an immaculate unit. It's a 3-bedroom, 1-bathroom, and there really wasn't anything that needs to be done. So we need to adjust rents, but on the other side of it, we needed to make sure that we worked with the residents because the current owner wanted to be hands off. So what we did was we came in and we created a relationship with the resident tenants and basically just walk them through this is what we have to offer. The main thing is that they understood, number one, that they had a great asset. So we walked them through and I don't want to use the word train, but train them on how to look for things in the home and get us information as quickly as possible so that we can make sure that we maintain the property.
Sure.
So that right there created the relationship. And then when it came time to renew, we walked them through the opportunity in the market, showed them the market rents. And then when we asked them for a market rent increase to adjust to market, they were pretty happy. Because number one, we had worked with them before we even asked them for market rent increases.
Sure.
But number two, they were just great residents and we had to keep them.
Yeah.
So there was we were nervous, but we priced it just right and the residents were very happy. So basically no big investment except for time and creating relationships. But number two, we were able to adjust that unit to the market rent.
Yeah. Well, and I think that taking that extra step to build that rapport with the tenant or the client makes a big difference. Because when I go and look at rental properties and tenants happen to be present, they're always like, oh, let me tell you all the things that are wrong and the people won't fix here. And there's that adversarial relationship with property management all the time. And I think finding a way to bridge that gap probably does keep your tenants happier and they want to be there. So
It does. And you know that that gap, that property management tension with tenants is also with owners as well.
I'm sure. Yeah.
This business is not exactly we're not in here because it's the sexiest business. However, there's an opportunity and there are several parties that have unmet needs. And we found that just simply being there for folks and making sure that we understand exactly what their needs are, that goes a long way. It doesn't solve every problem, but when a tenant has an issue, they're not saying that this is wrong and this is wrong and this is wrong. What they're actually telling you is, I have an issue that no one has even heard me. So we make sure that there's a communication portal. We make sure that we answer tenant requests in a certain amount of time. And then when we go there, we try to be there when the tenant or resident is home. That way we can actually just get to know them. And because I don't want them to have like a knee-jerk reaction or some type of standoff reaction because every time the landlord comes through, something negative is going to happen.
Sure. So how do you handle vacancies and what would you say your average turn time is between residents?
Yes, as mentioned before, vacancies are that's the number one cost killer, right? So as we're looking at our revenue, that would prevent us from making money. What we try to do to prevent vacancies is actually mitigate them. So when we look at risk as a general statement, so a vacancy is a risk. We look at how long is a vacancy, how bad is it going to be, like what do we have to do to resolve it, and how often does it happen? So again, it depends on the unit. So I'll go back to the 12-month lease. We know we're going to have a vacancy. We'll start marketing that unit 90 days in advance.
Wow. Okay.
So we anticipate that there's going to be a vacancy. If we do a lease renewal, we'll do that also 90 days in advance and then give the resident a lot of time to think things through. Also gives us some time to work out any kinks. If there are any challenges that they have that would prevent them from releasing and we would like them to, that we could have time to adjust and also make amends if there are any gaps.
Sure. Okay.
But that gets us to when we have that opportunity, we're looking at a gap between 5 and 7 days because we're able to make a decision and then go through and do some pre-work on the unit. If it's going to be a turnover, it gives us also time to start prepping the unit for tours. And depending on the unit, we'll try to do tours when the tenant's there. We try to avoid it, but most of our residents are okay with it.
Okay. That's great. So what would you say your best practices are for screening tenants, but still avoiding any fair housing rule violations?
That's a good question. So I like to be transparent with the company and what we're going to ask. So if it's going to show up in an application, why not show folks that beforehand? And so a lot of our questions we have, we'll put out there and folks will fill that out actually as a tour request form.
Oh.
So many of our application questions are actually in the tour request, and the tour request is just that. We don't charge a fee. We're not saying yes or no, but folks will understand that these are the questions that are pretty standard that we're going to ask. And when they see it, you'll be surprised. A lot of residents or potential residents would self-select out versus going through. And then when they go through, then we can walk through some of the finer points and we just start building that relationship throughout the application process.
Sure. I would imagine that also saves you both time because you're not taking tenants through that aren't even going to qualify.
Correct.
So,
And some of them will have questions because not everything's black and white, but they can understand, this is why we're asking certain questions. The main one that we get all the time is employment. So, employment is it's binary. Either you have it or you don't. But how long you have it really depends. What type of a job do you have?
right.
Is it reasonable that you have been in that role for 7 to 8 years?
Yeah.
Right. Some jobs are just they're seasonal and it makes sense for what they're doing.
Yeah.
But we want to have that conversation up front so they can make sure that they express their concerns and we can actually have that conversation with them up front.
Okay. Great. And so how do you actually communicate to the owners or the investor owners about the decisions that you're making and improvements that you suggest? What does that look like?
Ooh, that's a great question. For us, that comes in the upfront relationship when we start a contract. So our goal is to operate the portfolio of properties like an asset. So that means that we will work on a strategic level, which means that we believe that certain things we would like to do, but we have that strategy piece of our business. It's not just executing a lease and then collecting rent. So before we even sign a contract with an owner investor, we have that conversation about our philosophy.
Okay.
And the main thing is we think long term. So with long term thinking, that means that how we see maintenance is going to be long term as well. So we set the tone up front for how we operate, how we think of things, and a lot of folks will be like, "Well, that's not the type of people we want to work with."
Yeah.
So they tell us no, or we say it's not a good fit, and that's okay. But once we sign a property management agreement, in there is a couple of key things that we'll hone in on. Number one is that reserve. So that reserve that we have in there allows us to make strategic decisions on the investment property within a certain amount. And that's standard across all of our contracts. And that right there will force a lot of conversations. And we'll know by the end of that conversation if it's a good fit.
Sure.
And how we decide what to do is number one is it required?
Yeah.
Is it something that regulation requires, legal, the city, co-compliance? If it has to be done, we'll do it. But number two, when we look at things, what we try not to do is nickel and dime our owner investors.
Yeah.
We want to make strategic repairs that will impact the rentability or the desirability of a unit from the tenant's perspective. And so if the door handle's loose, well, we've got to tighten it. However, do we have to charge you for it? I don't think so. No, what we try to do is we also try to bundle our maintenance. So we will go through and we're not trying to have 1,000 trips for a couple screws, but we're trying to also consolidate our trips to make sure that the owner is getting the best bang for their dollar.
Okay. Yeah.
But it's a lot of trust. So again, because of most folks' history with property management, the first couple of times we come through the unit, we have found that folks ask a lot of questions. And we're there to answer those questions because we're not necessarily trusted until we go through a couple repetitions.
Yeah, I think that's one of the things people fear most about property management is that they're either paying you to do nothing or they're paying you and then you're constantly going, oh, and now we have a new repair request and now we haven't. And then you're thinking, oh, geez, where am I going to make any money on this rental property? So,
Right.
Yeah.
Yeah, $50 here, $25 there. It does add up. So the hard part is transitioning from that mind of the investor. If they have a residential home, if you take that and just translate that to the investment property, there's going to be more maintenance requests in an investment property.
Sure.
Now we do try to help the residents fix things on their own. And we walk them through tutorials and we try to work through that piece.
Sure.
If we don't have to come into the unit and charge the owner, we will not. So our goal is to not charge, which is a little contrary to what the philosophy should be.
Yeah, for sure.
But we're the fiduciary of the owner investor. So we want to make sure that they stay with us. And one of those ways is to not nickel and dime them for every little thing in their unit.
Can you give an example of one of those tutorials that you have for people?
Yes, right now we're developing the database, but the easiest one is going to be we have had a lot of calls for electrical issues. And it just happens to be it's a GFI that just got flipped. You have to go trip and you have to go and push the button. So those types of things, or understanding what'll happen with a garbage disposal.
Mm,
It's one of those appliance pieces that breaks often, but it's probably fixable. It's probably just broken,
yeah,
or sorry, it's probably clogged with something.
right.
So we walk them through how to look. So a couple things like that, but mainly it's
Mm,
that flipping of the GFI switch.
yeah. So in a way, you're also educating the tenants about how to take care of the property too. So that's great. Yeah.
It is. It's interesting because our tenants are on a journey, and some of them will come through. We have students that will just come through and they're on a quick stop. But because of the way the market is, our client base for residents is actually transitioning. So folks in the past would come through and they would be renters, but what I'm seeing more of now are folks that are coming through and they should be first-time homeowners. But with the way that they have their housing strategy, they're required to rent a little bit longer. So I feel like we're just training them. This is what's going to happen when
Yeah,
you buy your own home.
sure.
And I think a great experience there is we're walking them through and educating them. They will become better homeowners. So that's also a philosophy, is just to be a positive part along their journey as they transition through.
What do you think investors should look for when they're choosing a property manager if they want to maximize their long-term investment?
Yeah, it just really depends on what you're looking for. So there are different types of property managers for different types of owners and investors. And so we're more of a buy and hold. So we're strategic. We will take time to do quarterly business reviews. We're one of those property management companies that isn't just going to transact. So that would be something that if that's what you're looking for, that's what we're here for. But there are property managers that really align well with just transactions. They're there just to collect rent. They're there just um, to manage the tenants and do the maintenance. The key is making sure as an owner investor, you understand what you're looking for. And using amorphic phrases like "we want good communication" is actually not a very good criteria, because communication is described with descriptions. So
Mm,
there actually isn't a really great uh, definition of it.
mhm.
So understanding what exactly does that mean when you want great communication, or what does good property management look like to you? And oftentimes they will come with a list of things that have happened negatively in the past, and we can figure out from there what they're looking for. And we can talk about that. But I would say for an owner investor, what do you need? If you can figure that out and then clearly articulate that to the property management company you're working with or that you're inquiring, and make sure that you're very clear in asking them if they do it, how they do it, and when they have actually done it. And just interview them. And I'm used to being put through the ringer, and I think that's a good thing.
Mhm. So it sounds kind of like your purpose in doing this was to become the kind of property management company that you would wanna hire for your own properties.
Uh,
If you were doing that, right?
it actually is. It turned into that. As I was going through my requirement for property management, I was looking for a partner because I was new to the space. And the property management company that I was looking for, I wanted them to be the experts.
Yeah.
And so I enjoy the quarterly business reviews. I like understanding what's happening in the market, and I wasn't getting that. And I found that to be a gap. So I figured if that's something I'm passionate about, it's probably easy for me to put into my business because I only know how to operate a certain way. And so when I partnered up, I actually found my partner who is exactly the same philosophy.
Oh, good.
So we have a great partnership. And what's nice is we talk about what we offer. We don't typically have to sell or have to put anyone else down. This is just who we are. And we can have a conversation. If you like us, we'd love to work with you if it's a good fit. If not, I know 3 or 4 other great property management companies with different skill sets. I'm happy to make recommendations.
Yeah. Well, I think when you lead with value and you show them what your differences are without telling them what your differences are, I think it really drives that point home for sure. Yeah.
Yeah.
Okay.
And it's easier to talk about what I know versus what I think about you.
Yeah.
So
Sure.
we know ourselves inside and out.
Uh-huh.
I figure that I can answer those questions better than telling you about someone else.
Right. Okay. Any parting thoughts for investors out there on how to be successful with property managers?
Yeah, the best advice I have is go out there and start looking. I think the market is exceptionally hot. And if you know what you're looking for, there are great partners out there, both in property management, but also on the real estate buy and sell side with agents and also vendors. So right now, I think is a great time to start looking. And then if you're looking at property management, the best advice I have is to pencil it into your calculations whether or not you're going to be using us or not,
Yeah.
because one day you might want to just let it all go and keep your investment properties and go to someplace that has sun and beaches, and you don't want to deal with it.
Exactly.
And it should pencil. So that would be a good investment if it pencils with or without actual property management.
Good advice. Yeah. Well, thanks so much for joining us today. We appreciate it. And we'll make sure that we have Donnie's contact info in our notes on here. And we thank you for watching.